What is going on, investors? Hopefully, you guys had a great day out there. It is time to talk about Nike, ticker symbol NKE. The company reported their Q3 earnings after the bell today, and then we'll get into them. We'll take a look at the revenues, the profits, everything that we normally do with these companies, and then we'll come over and look at it from a technical perspective. Stock's basically been range-bound for many months now. We'll talk about how this stock is gapping up in the after hours. I'm seeing up about 5% in the after hours, about $7 to $8 per share. Now, over the last 52 weeks, stock's been as high as $179 and as low as $116. It's actually bounced off those lows more recently, like a lot of stocks. Stock's made a nice comeback over the last couple of weeks. We'll talk about that from a technical perspective, but I want to dive into these numbers. And a lot of people here on the channel understand that my portfolio centers around primarily FANG stocks, mega cap tech stocks like an Apple, an Amazon, a Google, and Microsoft as well. Everybody knows that's the centerpieces of my portfolio, but I often get asked what other stocks that I like to buy, and I tell you what, Nike has been a cornerstone and a centerpiece of my portfolio for many years. In fact, outside of just my Apple investment, I think Nike is my number one most performing asset over the last 10 years or so. This has just been a fantastic stock to own, and I think if you're like me and you're overweight kind of technology, well, Nike is a good way to balance out your portfolio, in my opinion, give you a little bit of exposure to other things in this market outside of technology, but still get the benefits of tech as well, as we'll talk about on today's show. Nike's direct-to-consumer, their website, their apps, certainly well-performing for this company. Revenues in the most recent quarter in the Q3 came in at $10.87 billion. That was 4.9% growth, so you're not seeing tech-like growth, but we do see tech-like margins over at Nike. And I tell you what, if their margins weren't that great, I don't think I'd be that excited about this stock, but the margins are tech-like and the revenue growth is still there to a certain degree. I talked about their Nike direct sales. This is on Nike.com and their apps and things like that. That was $4.6 billion. That was up 15% on a year-over-year basis. The company also pays a dividend. That is a number of that's another reason why I enjoy investing in this stock and just holding it for a long period of time. Right now, your current yield is 0.93%. But if you bought this one a long time ago, you're probably in the 4s or 5s on this one on dividend or reinvestments. Now, in terms of your share repurchases, they're doing a share buyback as well. They did $1.2 billion in the quarter. And I tell you what, they did a nice job. They got it on some of these down days that Nike had over the last quarter. That reflects an 8.1 million shares retired, a part of a 4-year, $15 billion program approved by the board just a couple of years ago. Now, Nike is gaining in the after hours, like we talked about, as their margins expand despite the supply chain and the inflation headwinds that are hitting this company, along with pretty much every stock out in the stock market. Let's jump into these numbers over at Nike. We talked about how they had that 5% revenue growth. You went from 10.3 up to this 10.8. Cost of sales coming in at about 3% higher, from 5.6 up to 5.8. You get your gross profit, so you take this 10.8, you minus off the 5.8, and you get to about $5 billion worth of gross profit. Guys, that's 46.6% margins from a clothing company. That's up over 1% from the previous period, where we're sitting at about 45.6% on those gross margins. As long as those gross margins can stay in the mid 40s, it doesn't really matter too much about this revenue growth. You'd expect this company to kind of have a little bit of seasonality to their revenue, and so you're not always going to experience large growth on that top line, but as long as you can keep these margins where they're at, if not expand them, certainly a very lucrative investment in my opinion. Now, demand creation expense, this is all your sponsorships, from the athletes to the stadiums to all that type of thing. It's basically a marketing expense. You see that's up 20% year over year, from 711 up to 854, and you've got total operating expenses, kind of all your salaried employees, that was up 11% year over year, from 2.3 billion up to 2.5. So you take this 5 billion, you minus off all our cost of about $3.4 billion, and they flow you all the way down to net income. So after they pay taxes and all those types of things over at Nike, you come down to 1.396, essentially $1.4 billion off of that $10.8 billion worth of revenue. Now, you do see that it is down year over year. And again, that was related primarily to the fact that you had demand creation expenses expand by about 20%, and your overhead expenses experience growth of 11%. That gave you 13% year over year growth on that selling and administrative side. When you only grow your revenues by 5%, offset a little bit by a little bit of margin expansion, you're still going to lose some ground on that operating income, or in this case, net income, down from 1.45 billion down to about that 1.4 billion. Obviously, if you look in the after hours, investors are not too concerned, but you wouldn't want to have a lot of successive quarters for Nike in that case. Now, we talked about the dividend you see for the last 9 months on a diluted share. Again, this is for 9 months, not 12. You made $2.85 over at Nike. They're paying you $1.22 for the full year. This is why Nike over the last several years has increased their dividend by more than 10% every year. That's another reason why you continually kind of buy and hold this type of stock, because you keep on reinvesting those dividends. All of a sudden, your dividend yield just naturally goes up over time. Moving on to the balance sheet about what you'd expect over at Nike. I think the only thing that jumps out at me is that we do have inventories increasing by about 15%. You went from about 6.7 up to about $7.7 billion worth of inventory. Now, Nike obviously is maintaining their margins in the previous quarter, but you continue to see this inventory start to build up. One of the reasons why they had increased margin was they're simply doing less off price or doing less discounting and coupons and clearance sales over at Nike. But if you continue to build up this inventory, eventually you might have to do that. Also, a little bit of supply chain probably issues as well. They probably have some inventory in transit, and that could increase your inventory count at least for a certain period of time. We'll keep close eye on that as we move through the year with Nike. Long-term debt stayed exactly the same over the last year as well. You're at about $9.4 billion. The company has well more than that in cash, very healthy from a financial perspective over at Nike. Now, in terms of the different regions, this gave us some really good insight into the North America region, just still humming on all accounts, up 9%. Europe up 7%. Now, you could look at this as a headwind, but you could also look at it as a tailwind as well. We saw a greater China see declines basically across the board in the significant footwear and apparel categories, down about 4% and 11% respectively, to give the country down 5% on those revenue side, from 2.28 billion down to about 2.1 billion. So some people might argue, well, maybe that is a trend that's likely to continue. Some people might argue that trend could potentially turn around. And when and if China turns around, certainly could give a boost to that revenue growth rate over at Nike. This also gives you a reason why a lot of people wonder why the athletes that Nike sponsors never says a bad word about China or what goes on there. Well, this is a very, very significant part of this company's financials today, but also a critical part of it in the future as well. You've got 11% growth on that Asia, Pacific, and Latin America region as well. All regions saw growth outside of China, which could be seen, like I said, kind of as a positive or a negative, depending on how you feel about the China demand going forward. You see, for the last 3 months ended, the reason why we talk a lot about China is you have this massive net income number, or this happens to be earnings before interest and taxes, almost net income. You've got $784 million worth there. In Europe, you've got 713. In the United States, you've got 967. And in APAC, you got 478. So China actually represents the second highest earning region over at Nike, despite the revenues actually coming behind the United States and coming behind Europe as well. It is a country that just prints dollar bills for Nike. You see, in the last quarter, it was actually their highest earnings from an earnings before interest and taxes. China is actually earning Nike the most money. Again, that is why you will never see anybody at Nike whisper a bad word about China. I'll let you decide whether or not that's something you want to invest in or not. I have decided that the performance of this stock is just absolutely phenomenal. Now, I've been in this one a long time. I think I bought back in here in the 40. I'm in this one for the $40 to $50 range. This stock went sideways for like 2 or 3 years. It was fantastic to accumulate shares in this range. You also got a pretty hefty dividend in comparison if you had bought in now. Now, we're seeing a similar type of thing. Really, since September of 2020, the stock has been going sideways, okay? The stock has really traded in a pretty tight range from 119 up to about 144, although it's peaked its head occasionally over 140, and I tell you what, when it does, it comes all the way up to 180. So me personally being in this stock for a long period of time, not necessarily an area where we're sitting at about 138. We're essentially sitting what I would say is in the middle of higher range for Nike, between about 129 up to about 145. Stocks, when they tend to gap into the middle of ranges, and that's where we're seeing this stock right now. If Nike is a stock that you like to buy, like to add to, I think you'll see some overhead resistance up here in the 140-ish range. I have this line marked out here at 144 because this is where the stock bottomed out here in September of 2021, and also back here last year as well. The stock really topped out in that 140, 145, 146 range. I would expect to meet some resistance there and at least pull back down to closer to the middle of this range, south of about 135. If you want to start a position in Nike today or this week or in the short-term basis, well, I would jump into this one, not necessarily with both feet, maybe a smaller position like a 1/5 or a 1/10, depending on how many shares you decide to buy as this one pulls back south of about 135. I think you could be a little bit more aggressive. There's clear support all the way down here at about 120 for the stock. It is where it bottomed out literally just last week. The stock was down here at 120. I would expect, if the markets continue to have negative sentiment, that we have an opportunity to buy most stocks back at the lows that they made last week. So if you really ultra patient on this one, I actually think you might get an opportunity to buy it again down here at $120-ish per share. And if you want to step in there, certainly I think could be a spot that makes sense with Nike. Hopefully you guys enjoyed today's video. Nike's never cheap from a price to earnings basis, and in my opinion is an excellent buy and hold candidate, especially the fact that while the dividend isn't high from a yield perspective, it does grow considerably every year. And so if you hold it in your portfolio for a while, certainly can become a critical dividend piece of your portfolio. That was Nike. We'll be back again soon with more. Good luck with your investments.